Hello, my name's Kyle Rodder. Well, last week was a historic one for Ethereum and the cryptocurrency industry more broadly. As we discussed here in the past, Ethereum has undergone its so-called merge, where the network went from proof of work to proof of stake. In this week's Cryptoverse, we review the event and what it means for Ethereum, then take a look at recent price action for Ether and the Ether-Bitcoin cross. To put it simply, the merge was successful. The act itself was being described by many as being like trying to change the engine of a jumbo jet mid-flight. If that was the favoured metaphor for the event, then it all went smoothly. Ethereum founder Vitalik Buterin took to Twitter on Thursday last week to laud the success. And we finalised. Happy merge to all. This is a big moment for the Ethereum ecosystem, he said. The purpose for the merge was to make the Ethereum network more sustainable and eco-friendly. It is estimated that the move to proof of stake will cut the network's carbon emissions by almost 99.99%, addressing one of the major objections of cryptocurrency's viability. That puts it at a possible competitive advantage against its main rival Bitcoin, which continues to operate in a far more energy-intensive fashion. It's a matter of contention whether the cryptocurrency industry's overall emissions will be reduced by virtue of the merge. While the Ethereum network will be far less dirty, it's expected profit-seeking miners will shift focus to other cryptocurrencies which operate based on a proof-of-work model. On the day of the merge, the hash rate, or the computing power used by a cryptocurrency network, surged for the likes of Ethereum Classic, Ergo, and Ravencoin. Nevertheless, given Ethereum's prominent role in facilitating transactions of smart contracts, including NFTs and other digital assets, the merge marks a big leap forward for both the network and the cryptocurrency community. Ether tumbled following the finalisation of the merge, having rallied into the event. While it's tempting to attribute the move to something to do with the merge itself, more than likely it was more a reflection of narrative and sentiment, that is, buy the rumour and sell the fact. A 9% plunge on the day of the merge and a steep weekly decline has pushed Ether's price in the direction of its primary downtrend. Crucially, price has also been pushed below technical support at $1,400. The next key levels to watch are around the 200-week moving average, and below that, support at around $850. The divergence in performance between Bitcoin and Ethereum reversed last week, with the Ether-Bitcoin cross rejecting resistance at its all-time high. Prices reverted to the 20 and 50-week moving averages as momentum turns to the downside. The next level of support seems to be around 0.064.